Once Jeff Bezos asked Warren that, "Hey Warren, your investment strategy is so simple, why everyone doesn't just copy you?" What Warren replied is what we'll see at the end of this video. But before that, I will show you guys how he became super rich. Yes, you guessed it right. He used compounding to his advantage to multiply his money multiple times. Going forward, we will see how compounding works and where we should put our money so that compounding machine multiply our money and make us rich. For this, we will go to Excel sheet and we will see how compounding works magic on our money. So here we are with our Excel sheet. We will start with returns from bank FDs. Suppose we put in 10 lakhs in FD with some bank earning an interest rate of 8% per annum, and that too for 20 years with our withdrawing it. Let me put some formulas like closing balance of first year becomes the opening balance of next year and so on. Let me bring the whole thing down so that we can get the final sum on bank FD after 20 long years. Wait, it's almost done. Here we are with the final figure. Here we see our 10 lakhs becoming some 46 lakhs after 20 long years of wait. That's not a bad number, though, considering the safety involved. Now if we look at other investment alternatives like stock markets, the return they provide gives us a very different picture. For example, Indian stock market has given CAGR of 18% in last 20 years. Now if we put 18% CAGR in place of 8% which we got on bank FD, let's see what we get. The figure comes out to be some 2 crore and 73 lakhs. That's an impressive figure vis-a-vis some 46 lakhs from bank FD over the same principal and over the same period, that is 20 years. Now if we see the CAGR of some of the greatest investors of the world, Warren Buffett for example, on your screen right now. In his early years of career he earned a CAGR of over 29%. Mind you, this is the number from the greatest investor of the world. Now suppose we run our calculations with this magical number in our Excel sheet. Let's see what happens. Simply we will replace 18% with 29% on 10 lakhs for 20 straight years. The figure is staggering 16 crores, that is our 10 lakhs invested for 20 years at the rate of 29% turns into this huge number. Now if we take another great investor of the world, Peter Lynch. He also earned the CAGR of over 29% just like Warren Buffett, so if we run the same calculations we will see our 10 lakhs turning into 16 crores in 20 years. Lastly, one Indian investor, Mr. Rakesh Jhunjhunwala. This Indian big bull has earned staggering CAGR of 65% over 37 years. Now if we run the calculations on our Excel sheet with 65% CAGR, it will blast your mind. This figure is whopping 2,800 crores. Unbelievable, isn't it? Now returning back to the question which Jeff Bezos asked Buffett, to which Buffett replied that nobody in this world wants to get rich slow. Yes, Buffett answered this to Bezos. So it's clear that stock market will make one rich. Although the process is slow and boring and it takes time. But one thing is sure, you will be rich only if you follow certain principles. These principles are called as principles of value investing.